My guest today is Dr. Phil Arcuri, and he is a PhD in mathematics from Oxford. We're talking about his accuracy tests of the TradeShark's software. So, Dr. Arcuri, can you talk about your background?
Sure. Yeah, after I finished my undergraduate degree, I worked at Oak Ridge National Laboratory for a couple of years, and I got to work on neutral beam injection simulation software, simulating the heating of plasma in a tokamak. That was so cool. And after that, I went to Oxford. I studied to do a master's and then a PhD and then a postdoc, where I worked on applied mathematics applied to biology. And that was very interesting. And I did another postdoc at the University of Illinois, also in the biology department. And then I decided to move to industry. And I went to work for, at that time, GTE, working with the folks at GTE Labs to develop a software system that dispatched all of their installation and repair personnel. It was like 20,000 people, essentially solving for each individual a traveling salesman-like problem, where we were trying to route them most efficiently to maximize their manpower.
All right, so talk about what you were trying to accomplish when you were testing the accuracy of the TradeShark software.
Well, I was given the software with the thought that it would be a completely independent test. So I had access to the data and I had access to the software. I got a few instructions from the team there on how it was to be used. And I essentially just used the software. It was amazingly easy to use. I clicked on some markets, asked for the predictions, and I exported them to spreadsheets where I did some statistical analyses. And I did that for 359 markets. It's a lot of markets, but it didn't take but a couple days because the software was so quick and so easy to use. I was very impressed with the quality of the results.
All right, talk about that, the testing of that data. What did you do when you had the data exported?
Well, it was 3 years worth of data, which is about 750 data points per market, so the results were statistically significant. And I computed the difference between the actual predicted value of the neural index, which is a proprietary index that they produce, with the predicted value. And then for each data point, of which there were 750, I computed the mean error, the standard deviation of the error, and I found that on average, the software was 79% accurate over all markets, 359 markets, with a very small standard deviation. I think it was 1.9. What that means is that the software, the predictions are very consistent.
Now, I know for a PhD in math, it's easy to understand the results that it gave you, but what about for a trader sitting at a screen?
Well, you have to understand what that means, the 80% accuracy. These markets have an inherent random component, and no one really knows how much is predictable. In fact, that's one of the big unanswered questions is, how much is predictable? Is there anything predictable? The fact that we can get 80% accuracy in an indicator like this means that we're doing, I think, very well. We're approaching the upper bound on what is predictable.
What about up markets versus down markets? What did you find there?
I didn't find any noticeable difference, up, down, or sideways. The results were consistent across all the different types of markets, the stocks, futures, and currencies, forex pairs, whatnot. And there was no noticeable difference if the market was going up or going down or sideways.
Did that surprise you?
It did, kind of. I was expecting it to do better in one area than another, just because you would think that the underlying mechanisms in the market would be different and that the software would find, maybe it easier to do one than the other, but I didn't find that to be true.
It sounds like most softwares may be good at one or the other, but not both.
I think that's probably a fair statement.
Talk about some of the examples of results you got. Can you give us some examples of those?
I can tell you that the high was 83% and the low was 76%. But having done 359 markets, I can't pinpoint a particular market as standing out more than the others. And that was kind of surprising, is the consistency that was the big deal in my mind.
The difference between those two numbers, did that surprise you?
The fact that they were so close together, yes, actually, I was expecting not to see something as high as 83%, and I was really expecting to see something lower. In fact, a standard deviation of 1.9, very small, and that's an indication of how consistent the results are. And so yes, it was a bit of a surprise that there wasn't something a little, an outlier at least, one market that didn't do as well, but there just weren't any.
Now you mentioned sideways, which is important for traders because of course staying out of the market when you're not supposed to be there is just as important. How is that helpful?
Well, the software predicts sideways. It predicts up or down or NA, which is sideways. And it does that about 10% of the time. I think it was 11% actually. And that's important because, if you're not in an uptrend or in a downtrend, then how are you going to go into the market? You really don't want to be in the market if it's sideways, or if you're already in a position, then you probably just want to hold your ground. Everybody has a different style. But it's important to know, the underlying trend that's going on in the market, and sideways is an important prediction because it helps you understand that.
So the software helps you make good trades, but stay out of bad ones too.
That's right.
Let's talk about your results and your impressions of that. How helpful, based on what you know now about the software, is this TradeShark to an individual trader?
I think it would be a great tool for any trader to have because the neural index is a very good indication of the underlying trend. It's actually predicting the difference between a moving average computed today and that same moving average in the future. So it gives you a leading indicator on which way the market's going to go. And it's 80% accurate, so you can have some faith in the result that it's producing. So if you're thinking of getting into the market, this can confirm that, yeah, you're making a good decision. So I think it's a very valuable tool. Just this one indicator, and of course there's a bunch of other predictions also produced by the software, which I didn't look at in this particular study.
You mentioned that high success rate. It sounds like it's extremely rare when it comes to trading software to have that.
Yes, I can't claim to know what all the other software out there does, but having studied neural networks some in my lifetime, I can say that this is pretty amazing accuracy.
And it sounds like the beauty of this is that you don't have to know a lot about or anything about really neural networks to use this to make money.
Absolutely. It's so simple to use. You tell it the market you want, you tell it which indicators that it produces that you want, and you download the data. Actually, the software does that for you too. And boom, there are your predictions. It's very simple to use. You don't have to understand the underlying algorithms at all, which is good because they're exceedingly complex, and it's a great tool to use to trade.
So you've talked about the accuracy, you've talked about the consistency of that accuracy, but if it's not a clear signal in front of the trader on their screen telling them what to do, they may miss it. What's your answer there?
Well, the indicator, the neural index, is one of the more simple indicators. It's either up or down or NA, not applicable, sideways market. You can't get much clearer than that.
Dr. Arcuri, thanks for being here.
Thank you, Tim.
I've been talking with Dr. Arcuri about the accuracy of TradeShark's software.